So let's start to understand time frames and using a higher time frame and a lower time frame. We're going to go back to the charts in a minute and kind of use that same area of price that we've been using in our past examples. And we could use a higher time frame and lower time frames to get a better entry understanding of the market. So technical analysis is based on the study of price movements and patterns to identify potential trading opportunities. One important aspect of technical analysis is chart timeframes, which refer to the period of time that each candlestick or bar on the chart represents. So you'll see the daily, 4 hour, 1 hour, 5 minutes, 15 minutes, 1 minute, weekly, monthly. You could literally put whatever time you want, but I'm going to show you kind of a system I use and the most common ones that'll help you out and get away from most of the noise and using too many time frames. Really, the choice of time frame depends on your strategy of where you're going to be entering in on trades, but you should be using all of them because they're going to help you identify what the market is actually doing. So let's go into the charts and kind of give you examples and explain doing this. So we're going to go back to, we were on the daily, I believe. Yeah, we were on the daily. Okay. So let's say this was our main trade and you're like, I don't want to use 100 and if you look right there, 128 pip stop loss. That's more. My account's smaller. I can't get a big position on this. And then what do we took it down to? We took it down to right there at that trend line, right? So let's say that's our trade. As of right now on the daily time frame, we're at a 14.97. Really good still. Really good. So let's go down to the 4 hour and go back to our entry. Okay, so now we're on the 4 hour. And you could see price never really got in on here. It was still above here, but it was overbought and we got that crossover. So the entry is pretty spot on still besides our moving average. That's why I like to use higher time frame moving averages. And our stop loss, we could bring that down to above this area right up here. Want to go a little above it just in case price does poke above this one more time. So right here, or if you want to be safe, we could go above this one right there. So we turn that down from 128 pip stop loss down to a 50 pip stop loss. And now our trade is at a 38.11. I'm not saying you're going to get trades like this every single time because you're going to get emotional in these swings. So maybe you got out right here, came back in, set up again, you got in again, got out here. That's how I like to trade. I like to play each swing on that giant move. But let's say you're a swing trader. Now we got it down to a 50 pip stop loss, right? Let's go down to an hour. Go to that same area. Okay. How could we get this this stop loss even lower? Well, once price went through this, overbought, right around this area, MACD's crossing over. You could see it's not really good to use on a shorter time frame. It's not going to give you a good indication of what's going on. But let's say you kept the same entry. So how are we going to get this stop loss any tighter? Well, price came up into these wicks and left. That's where we got in on our sell. So you could bring it down right above those wicks if you're trying to be more aggressive. What's our stop loss at now? We're at 18.3 and now we're at 105.18 risk to reward. Now, it may seem easy. I'm not saying this is easy. What I am saying is having a higher time frame bias and then getting in on the lower time frames and putting your setup, your stop loss, entry points, and then even some exit points on like a mid time frame. Say our setup's the daily, we're entering on the hour. Maybe the 4 hour will give us a nice let's get out when it crosses at that trend line, which is the same pretty much setup because we're taking these points. And if we did line it up a little more aggressive on the 4 hour, you may have got out of your trade here, but because it was a wick, you waited for it to close. You're still in the trade. Again, wick here. You would have got out right here, a little bit less, but again, that is up to you to put your system together and figure out what works. That's why you'll be back testing, and we're going to talk about that in the next lesson.